Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you've come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
Hey guys, this is Duncan Wilson. Actually, we already introduced ourselves in the original video. So we are here to talk to borrowers on the Mortgage Suite beautiful side. This is about rule changes, Sasha.
Yeah, rule change. Lots of stuff coming.
Oh, just honestly too many. There were so many rule changes that were all like, oh no, not that.
Yeah.
Oh, that rule sucks.
Throughout this year?
Yeah, even last year, the year previous, with all like foreign buyer rule, stress tests coming in, it just made mortgages harder and harder and harder. And I think like any kind of market, it gets more, more difficult to lend money out. But then all of a sudden, we see the light at the end of the tunnel.
Yeah.
We see it. And it's kind of like you want to sing a song about it. I don't even know what song we could sing about this light at the end of the tunnel. But, I got it.
That was just thinking of that song.
Or
God.
I can lend clearly now. The regulations changed. So I would say, let's go through the rules. Sasha,
Okay.
I'm gonna have Sasha begin these beautiful rules. And before I say anything too, I had a realtor friend watch these videos. Not only did she make fun of me, was she supposed to, but she also said, I gotta look at the camera more. We have to look at the camera more. So I just want to let you know, eyes on you.
We are watching.
Eyes on you. All right.
Looking in your eyes right now.
Regulation changes. Take it away.
I see you go into the other tab. Don't go to that tab. Stay right here. We're looking at you. We are engaging you.
Yes.
All right. So there are some pretty cool rules coming finally from our beautiful government.
Mm-hmm.
I guess the first one we'll start with is the cap increase. Cap increase. So this is a good one. So insured purchases, if you're purchasing with less than 20% down, the cap was 1 million purchase. But as everybody knows, these new builds are getting to be quite expensive. So I think in light of that, they have increased the cap to 1.5 million.
Now, here's the weird thing. I know Sasha said 1 million, but we never, even as a broker in this professional market, was it $999,999?
At 99 cents.
Or was it, or was it a million? We just never knew.
Yeah.
So if if you set up a deal with $1 million purchase price, were they okay with it because it wasn't $1,001,001?
Yeah, that's true. It's kind of around the edge.
So we're in Windsor. We don't normally get $1 million mortgages, and anybody buying one down here, we're like, whoa, what the heck?
Yeah.
But
what does that guy do for work?
Yeah, exactly.
And does he hiring?
So I would say this, Sasha can continue the actual thing, but 1.5 million is pretty awesome.
Yeah. So just to jump back there, so typically, like if you have a down payment, the minimum is 5% up to the first 500,000. From there, from 500 to the million or 999,9999. Then it's 10% of the difference. So now it's 10% up to 1.5 million. So that is like in general, I think a pretty cool thing that they're doing.
So it's 125 grand that you can buy a $1.5 million house now.
Yeah, rather than that 20%. Because once you get to a million, it's 20%.
Yeah, $300,000, guys. So you're talking about an overall decrease of 175 grand in down payment situation going on there.
Yeah.
So, put your money back in your pockets. I mean, you're going to need probably 2 or 3 fridges if you're buying a $1.5 million property. Now you can buy those. You're going to need more couches on a natural basis because of the room sizes.
Yeah.
But our average mortgage in Windsor or average purchase price is $550,000 to $600,000 right now. So does it impact a lot of people? No. Do we hope Windsor home prices go up over $1 million? Not even close, man.
Not really.
I want to go back to the days, right? And like, what did you buy it for? $75,000.
Oh, man.
Beautiful, man. And then the client came to you and be like, dude, oh my God, I'm short on my down payment. How much you need? $500. No problem, man. Here's $500. Make up that 5% down for you.
Oh my
so
God.
that's one of the biggest rule changes. Give us the next one, Sasha. What is the next one we're going to pour into this beautiful podcast today?
Sure. So the next one, first-time home buyers under the default insured program can qualify in a 30-year amortization rather than a 25-year amortization.
I want you to look at me right now because I am tearing up. This one, I've been waiting for. I've been waiting on this for so long because I used to do 30-year AMs all the time. 5% down, 30-year AMs. They made my heart tingle, and then they left the market, and then everybody had to go on a 25 massive payment, and it just sucked. And I want to let you know, I could actually throw a tear out on purpose because 30-year AM is huge.
Yeah.
I got scenarios, guys. So I got a client, $549,000. That's the max mortgage they can qualify for. Flip it to a 30-year RAM on December 15th. She can afford $595 to $599, $40,000 to $50,000 difference in purchase power there, guys. Purchase power is huge,
Pretty
right? So, I could go back. Honestly, I wish they'd go 40-year AM, but that's just me. That's me wishing. I'm glad they at least made the leeway there and saying, okay, obviously there's the bigger home prices. How do we get more people back into insurance? And that's the thing. We have Sagen, we have CMHC, Canada Guarantee. Those are your three major insurers across this country. And I think they're sitting there going, we can't really apply and give insurance to anybody because the affordability is not there. So this is a huge one. The 30-year AM is huge for affordability.
Yep. So there's two more, and I'm going to leave my favorite one for the last. So the next one, as of November 21st, if you're switch transferring your mortgage to a new lender for a lower rate. What's that? Oh, that's tomorrow. Thanks, producer Maddie. That's tomorrow, everybody.
Good job, Max.
See how I'm engaging you in your eyes, guys? That's tomorrow. So if you have a renewal, hit us up.
I honestly thought the 21st was 2 days ago.
I was not paying attention to the calendar at all. The days just kind of all blend together.
Yeah, it's called broker mindset.
Yeah.
You just don't know what day it is. We just know we have to close next Friday. We don't know the date. We just know next Friday is a closing date.
Yeah.
So
anyways, as of tomorrow, thank you, producer Maddie. They are eliminating the 2% stress test. So what that means is if you're going to switch your mortgage to a new lender, you don't need any money from the equity. You can qualify at the posted contract rate instead of qualifying at that contract rate plus 2% because it's money that you already own and you're not taking any new money. But I do believe like you can't change the amortization. Like none of the details really can change.
On a switch, you got to keep all the terms the same because you're keeping the actual charge terms and the actual deed to this title of the home. You got to keep everything the exact same. The cool thing is though, if you're doing an insurable switch, for instance, you can now take advantage of this really wicked rate that you're not getting from your Bell lender. I call it the Bell lender because Bell always gives new, better terms to new, cell phone people. But in the new lender, it's giving you a wicked insured rate. You can do an insurable transfer if you originally had it insured, and you can get like right now, I think. And this is today's date. I think you can get 4.09 or 4.04.
I think it's 419. Are we allowed to say the lender's name?
No, I wouldn't even say that because we don't want them pouring in because we got to submit those deals up there. And we don't want everybody to submit a deal there. But that would be insurable. I know when you're talking about the insured rate for an insured transfer, if you keep that mortgage insured with CMHC, Genworth, Sagen, you're looking at, you could price it down. As a broker, we could probably get you, and I'm not going to say this, not a guarantee, guys, but around 3.99%, under 4. Now, lo and behold, just to give you guys an actual idea here, I think about 5 years ago now, I handed out 3.74 10-year fixed rate mortgages, man.
Wow.
Boom, boom, boom. I was handing them out like cookies because I figured something's going to happen to the rate. And then, lo and behold, it did happen. But this whole transfer switch thing does bring a huge thing to the game here when it's coming to a borrower that wants a lower payment. There's no more restrictions in that case. There's no more me going, oh, I know I told you I can get you that rate, but looks like your ratios don't fit because I got to add 2% to the stress test. And this is how I talk to borrowers. Sorry, Mr. Borrower. Sorry, borrower. Yeah. So that's a huge one, transfer switch. And then now I'm going to let Sasha tell you about his El Febrerito rule change to the governmentos of Canada. Okay.
I always help you get there. I like that.
Sí, senor.
Yeah, so the last one that's coming in, it's a really, really, really cool one. So if you are already a homeowner, any homeowner, and you want to refinance your property specifically to add an additional dwelling unit to the home. So for example, your basement has plenty of room, maybe it's unfinished, but now you have this opportunity to turn it into an ADU and generate some income in your property. You can, and drum roll, because you are refinancing 90% loan to value of the as completed value of that property.
Pow!
What does that mean? Boy, gotta leave a wine mixer. So what does that mean? So say your house is worth $500,000 as is, and you get a contractor to come in and do the quotes and, you know, give you a beautiful quote paper that is going to tell you how much it's going to cost. And then you take that beautiful quote paper to one of our wonderful appraisers that we work with, and they tell you, well, after this, considering these plans, your value of your home should be at $700,000. Well, now you can borrow 90% of that $700,000 to get that project done and maybe clear up some debts or invest in the MIC at Erie Shores Capital. And maybe take your partner out for a nice date and get some money back in the savings and
Yeah, so it'd be like
mortgage payments.
It's pretty cool too. But even that, you might even just go 90% of the current value and know that you're increasing it because maybe you paid down your mortgage. The biggest thing here is I got to tell Sasha, unit's almost done. Don't worry. Got the refi done. You can move in 2 weeks.
Yes.
Okay, I got your unit.
That
beautiful.
couch to sleep on,
it's
yes.
above the garage. We got a brand new garage with a unit above it that Sasha's living in. So that's kind of the idea there. It is a huge one. And that happens when again?
I believe that one is also taking effect on December 15th.
Is it for real?
Yep. Producer Maddie is doing her thing.
And then we got questions on our last beautiful video that we're going to answer today as well, just for fun.
Yeah, and thank you for leaving those questions. Why don't you guys leave more for us?
Seriously. We'll get back to them. We'll answer the best way we can. As much as we have a lot of fun doing what we do, we give some good advice in a fun way.
Yep.
Go to ADU rule changes. I thought it was honestly, it was next year they were trying to do that one.
Really?
Yeah, man.
I thought they presented all those changes was on December.
And Maddie, you
15th.
better air all this confusion because there's so many rule changes.
It might be January.
Don't worry, guys. We definitely know what we're doing, though.
Yeah, we'll figure it out. I believe it's January 15th. It is December 15th, and Sasha's right. But anyway, I'm thinking January 17th. Regardless, we'll post that up there. Maddie will let you know. Maddie, what is this question that we had from this beautiful viewer? Look how prepared Maddie is.
She's so great.
I'm a co-signer on a mortgage with my brother, but I need to file Chapter 7 ASAP. Chapter 7.
Yeah.
What protections are offered? What protections are afforded our house? What protections are afforded to our house, I guess she's saying?
Well, I mean, I did recently go through bankruptcy throughout COVID because COVID shut my original business down. That's how I got into this mortgage market. So thank you, COVID. When you go bankrupt, you do not have to include the property in the bankruptcy. For example, in my own personal experience, I didn't include my motorcycle. It's the only thing that kept me going. But I just, you can claim bankruptcy for all the debts you have, but you do not have to include the property. If you can maintain that mortgage payment, I think they let you keep it.
Yeah, what they do is they include the asset value inside it, but then behind the scenes, the mortgage borrower or lender, in that case, is saying, hey, you continue making payments, we're okay. It does still show up that you included the house in there, possibly. The other question I have for you is, you want to go and file a bankruptcy, and it's quite all right. But there's other options too. Yeah. There's budgeting options. If it's that far gone, you could probably look at a proposal instead, which protects your assets and just takes care of the external debts. There is videos previous to this, and we were just talking about this, how our first podcast was with Andrea or as a trustee. But you could go talk to any trustee and say, hey, listen, this is what I'm doing. This is my budget. Talk to a trustee first and find out what fully are the protection. As a broker, we're typically the people that get the file after the fact or before the fact and work it out. The whole essence of what happens within that can change. It can make a difference whether you have too many assets, whether you make too much income. So you might not even be able to claim Chapter 7 or bankruptcy in Canada, depending on the amount of money that you're making. They might just say, no, you can't do that. So I would say in your local area, wherever you're at, look up your trustee and talk to a local trustee, or even give Sasha a shout here. Sasha, throw your number.
519-919-1069.
Easy number there, guys. It's only 9 digits.
Yeah, I would also suggest that too. If you go see your trustee, from there, you should come and see one of us so that we can review your situation. Us going through a budget review is an ancillary product. It's free for you. And it's fun for us. So, because it gives us an opportunity to get to know you and, give you some good advice. So, and if you have equity in your home, maybe you don't have to go Chapter 7. If you're just a co-signer on the property, maybe there's a deal to be had with you and your family member, and you wrap up some debts and just pay a little bit more on the mortgage payment. There are lots of other options. So don't just pick the first one that you're thinking about.
And the thing is too, like it should be a lot of debts in order to do that. I've seen some guys that have it, and some gals too, but some borrowers have like a $30,000 bankruptcy where they were told to do this, but it's like, couldn't you borrow money from somewhere, or couldn't you have just worked out any kind of payment plans with the actual credit card companies? But they were never told these options. Yeah. So that isn't their option.
Or what about like a local credit union to get a personal loan or something? Consolidate debts at a lower rate, right?
Give Sasha a shout about that, guys. Honestly, thank you so much for the question. I want you to answer more questions, and we'll probably follow up with those questions as we do our podcast. We are doing them more often, and as you can tell, we have a little bit different environment now. We're trying to sit up a little bit. Yeah, moving on up, trying to sit up a little bit more professionally. So just to recap quickly, rule changes, they're always constantly happening. We'll do our best to actually give you the best and updated rules that are changing, and as they come to us, we'll always update you. But we got a 30-year AM coming. We have $1.5 million purchase price cap, which doesn't really affect us too much down here in Windsor, Ontario. And then we also have the ADU 90% refinance that Sasha loves.
That's such a great product.
He loves it. I cry at the 30-year. He's jumping joy at the ADU. And then obviously for transfer switches, the beautiful fourth rule, transfer switches being not stress test is huge. It allows you guys to quickly move lenders, okay? At a good low rate. Other than that, thank you so much for watching, guys.
Till the next one.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.